Hello, I'm David Chaston with 98.9, brought to you by Interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news markets are stable even if one of the key policymakers isn't. Firstly, analysts have been delving into the mystifying bullying by the US of Canada. And nothing seems to make sense. The US does have a small annual goods deficit in trade with Canada, tiny actually, but it does also have a small trade surplus in services with Canada. The net is a surplus in the US favour, and that is based on the US's own data. On dairy, the trade is even clearer. The US runs a surplus with Canada. Facts aren't alternative in Washington, they're absent. They are, however, rejected for some fact-free, crazy narrative. Japanese machine tool orders leaped 14.9% in May on preliminary data, on top of the 9.6% gain in the final data released for April. These are substantial improvements in a sector that bodes well for future Japanese export trade. And staying in Japan, their government is committed to investing $70 billion into the Indo-Pacific region. This comes as the US pulls back and China rushes to take advantage. And Japan may be a key player in a post-US trade world to balance out the equally unpalatable Chinese one. If NAFTA fails, the Mexicans are extending their options. The CTTP will also be a key institution. In India, fears of higher inflation are growing again. Consumer prices are expected to rise 4.8% in May, driven up by sharply higher petrol costs. Their central bank recently raised their policy rate to 6.25%, and there are concerns it may have to go higher still. All this is a concern because of some reversal of recent progress that was thought to be essential to stabilise the basis of their rapid expansion. And the rise in fuel prices is not just a concern in India. In China, truck drivers are protesting the same thing. Protests are unusual and very risky in China. Around the world overnight, equity markets have been in positive territory, not hugely, but positive all the same. The US Treasury 10-year yield is at 2.96%, that's up 1 basis point since yesterday. The Chinese 10-year is at 3.67%, that's down 2 basis points, while the New Zealand equivalent is now at 3.01, that's down 1 basis point. Oil prices are little changed today, and the US price remains just over $66 a barrel. The Brent benchmark is now just over $76.50 a barrel. Gold has hardly moved and is still hovering around $1,299 an ounce. The Kiwi dollar will start today marginally softer at 70.2 US cents. On the cross rates, we're still also a bit softer at 92.3 Aussie cents and 59.6 Euro cents. That puts the TWI at 73, and really very little change since yesterday. I'm David Chaston. That was 90 at 9, brought to you by Interest.co.nz.